Excellent. Well, thanks everybody. So I'm Atkin with RBC. I focus, I lead the global investment research effort on all things digital infrastructure. So that means data centers, towers, fiber, cloud computing, AI infrastructure, and pleased to have a very distinguished panel here. I think what I'd like to do is just briefly do some introductions, starting with Sam at the far end, and then we'll go to Chris, Chye, Charles, and then Sam. So Sam, number one with EdgeConnect. Why don't you introduce yourself, and then we'll move on to Chris.
Thanks, Sam. Hi everyone, my name is Sam Lee. I'm the Managing Director for Capital and Commercial Development for EdgeConnect, APAC, based in Singapore. It's great to be here. Thank you.
Hi, I'm Chris Street, the Group Chief Revenue Officer at STTGDC, based in Singapore also. Very happy to be here.
Good morning, everyone. My name is Chye. I'm MD and Head of Data Centers for Core Capital. So we're a private equity real estate firm. It's a new platform that we're building, and we have projects across 6 countries in Asia. Thank you.
My name is Charles Cosgrove, and here in twin capacity is Chairman and Co-founder of Digital Halo and Arch Capital. Happy to be here.
Good morning, everyone. My name is Sam. I'm the Deputy CFO for GDS. We're a new entrant into the Southeast Asian market, but we're predominantly currently in China. It's great to meet a lot of old friends and new friends.
So we're going to dive into a number of topics related to commercial trends, demand, things like site selection, cost of capital. If there are any questions in the audience midway through, feel free to make yourself visible at any point, and I'll try to call on you. But I'd like to maybe start off with a question for Chris. Given your background in STT, but you've also played a major role in different parts of the industry with a major hyperscaler, with a global real estate firm, and so forth. But what changes have you seen in demand patterns across the Asia-Pacific region, and are they consistent across the region or somewhat more localized?
Sure. So I think what's changed probably in the last 5 years. And yes, I've had all those roles because I'm old. But the last 5 years, really, I think the growth, one of the biggest changes is the diffusion of growth, and so it's not just the hub cities anymore where, if you go back 10, 15 years, it was Tokyo, it was Singapore, Hong Kong, right, and Shanghai, but now we're seeing growth across the entire region, right, and before on the discussion point around the presentation just previous was around like Johor. That was a market that really didn't exist 10 years ago at scale anyways. There was smaller retail sites there. The other aspect I would say that besides the diffusion that's been quite a change is and this is probably following what some of the trends in, say, North America and maybe some of the big hub cities that we see in like London and in Europe, is the bite size of the hyperscalers, and not only the top 6 or 7, but the next scale down in terms of what they're willing to commit to. And so that, previously maybe it was 5, 8 megawatts for terms of 3 to 5 years. Now it's much bigger chunks here in Asia-Pac, which I think is a new dynamic for the region that you hadn't really seen with the frequency in which we see it now. So diffusion and size of deals.
So we'll get a chance to talk more about local trends, because towards the end there's quite a number of countries in the region that I'd like the panelists to kind of drill down on. On demand, I'm sticking with you, Chris, and then maybe Sam Lee can chime in, but given the wider geopolitical landscape, what demand differences have you seen in the region amongst the US versus the Chinese hyperscalers?
Well, I think, what we're seeing and what's out there is that There's still a lot of demand from both sides, but it also is market dependent. There's obviously geopolitical challenges in India for the Chinese hyperscalers, I think everybody's aware of. But in most of the markets, in Indonesia, one is where both sides have a strong vector of growth and supported by local demand. But I think what we're starting to see is the Chinese come back with some of the same vigor of what they had maybe pre-COVID, which is exciting. And then the U.S. guys, I think, are scaling up another round of scaling that haven't seen. But it is getting, because the deals are getting more complex, some of the deal, I'll say velocity, is sometimes challenging. It doesn't move as fast as you'd like it to.
So Sam, and then Sam Long.
Yeah, thanks. Obviously, the geopolitical forces are absolutely critical to not just the cloud adoption and the demand side, but also the ability to build out the infrastructure to support that digital infrastructure that it forms the backbone of that ecosystem. You look at obviously places like China, predominantly or very, very clearly dominated by all of the Chinese hyperscalers. The American companies are playing catch up by a very large margin. Then you look at the flip side in places like Taiwan, obviously, where the Chinese hyperscalers have a very small presence, and it's very difficult due to political reasons to grow that business. But when you speak about generally across Asia Pacific, again, the U.S. hyperscalers by a large margin are dominant in terms of the presence and the footprint. When you look at places like Indonesia, which is probably very fitting, recently the government then implemented restrictions in decoupling e-commerce with social media. So that not only changes, again, on the demand side and the front end, but also the infrastructure gets affected too, where those two platforms cannot reside, or at least there isn't a clear determination yet, but from the indications as of today, it seems like those two platforms need to reside in physically separated facilities. And so I think as the new advent of now AI that's coming on board, a very, very big demand that we just have seen really just the tip of the iceberg. How that pans out throughout Asia Pacific is, I think Manoj put it very succinctly, it's both exciting and scary at the same time, because we really need to be able to, ourselves as a data center operator, we need to be able to understand that wave that's coming, and then obviously need to be able to provide solutions in the right markets and with the right strategy going forward.
So maybe sticking on that, and others can feel free to chime in as well, but just interested in whether the demand for hyperscale data center inventory is more cloud dominated, is it more social networking dominated, is it AI? Sounds like, according to you, Sam Lee, it's still kind of in early stages, but you all may have different perspectives on that. Certainly if you look at Europe and North America, different developers will give different answers on that. I think they're all quite strong, but what would be your view? Balance between social networking, AI, and cloud?
I guess I'll start. AI is getting a lot of attention, but really the cloud growth is still, the traditional cloud as we know it. I think right now the industry as a whole we know that it's coming, we know that it's massive, we also know that it's very, very high density, which drives a different type of engineering solution, as well as a different real estate solution, and potentially even a different capital type of solution. But the driver behind the AI is massive. I think today, when you look at the footprint and the type of product that's being delivered, AI is still piggybacking off of the traditional cloud type of solutions. And so going forward, we know that there's the need to have the learning models to be in hyperscale facilities. And we're, as Chris mentioned, we're not talking about 10, 20 megawatt sites, we're talking about 100 megawatts minimum. Then you also have the inference engines that need to be a little bit closer to the end user, so more on the edge sites and edge locations. So I think our industry is really in for again, wild ride, exciting times. I do think, Edge Connects, for example, we have our own initiatives to figure out and deliver solutions that can meet that AI infrastructure requirement. It is a good opportunity as we look at entering new markets on greenfield developments to push the limits of innovation, not just from a efficiency perspective, but also from a sustainability perspective as well, just because of the massive amounts of power that these new AI data centers will consume.
Understand.
So maybe I'll
Go ahead, Conrad.
chip in. So we work with a number of portfolio companies throughout the region to deploy our services, and as of now, most of the requirements we're seeing are still based on cloud. But we do see more and more AI type requirements coming in. They're incorporating more and more GPUs into their service offerings, and we keep getting lots of requests for large land parcels in more and more non-traditional places. Power availability is becoming the absolute critical factor now in terms of deciding where these large AI locations are going to be.
I just want to offer a couple of comments on the, I think I'm the oldest guy on this panel. I've seen a bunch of cycles, maybe some of my friends up here have not. I think the geopolitical shifts in Asia-Pac have imposed a substantial overlay of complexity in the business that we're here to talk about. Without going to the weeds on why that's happening, I think it's become a real challenge, I think, to both investors and operators to understand what appear to be, at this point, still ill-defined out-of-bounds markers or points of differentiation with respect to Chinese social media, also Chinese technology companies in Asia-Pac. And so if you want to amuse yourself, maybe you go to the Department of Treasury sanctions website and take a look at literally the hundreds and hundreds of sanctioned companies that are out there. And I think it just means that as we move forward into this really exciting time, it is indeed the best and the worst of times in that sense. I think we're all going to have to bring a skill set that was not previously required in the real asset world, and that requires, I think, a lot of sensitivity to what appears to be a pretty broad-based and well-entrenched view that this dichotomy, if you will, or bifurcation in technology transfer and the whole sanctions environment are pretty much here to stay. And I think has a significant impact on the way we plan and also operate our businesses. Because, as I said earlier, the OB markers are not established. You only know when you hit it, and by then it might be too late.
So, Sam, you operate inside of China as one of the largest, if not the largest, third-party developer, but you have an aggressive ex-Asia expansion strategy. How do you see the demand vectors different inside versus outside of China?
Well, I agree with what all the panels have said, but I definitely, AI is big. We know it's coming. We do know that the demand there is not bite-sized. When I say bite-sized, it's 20, 30 megawatts. It's 50 to 100 megawatt size that are coming. But I definitely want to echo what Charles said in terms of geopolitical politics, and I don't want to touch upon that too much, but I think every country will be somewhat different, obviously. You have, obviously, training models, you have inferences, what Sam talked about, so that itself is a different location in some senses. But let's just go China specific then. The AI adoption there is going to be very different from what you see in the Western world, particularly, let's say, US. In the US, ChatGPT came, AI became proliferated, everyone started using it, GPU chips are abundant, available to people. So, and then when everything starts moving up to the top, and you have that natural velocity, and then let's talk about having the big companies come lobby on how we do a framework to manage AI. Whereas China, it's a little bit different. You have to have that somewhat of a framework first before everybody goes a little bit crazy on the AI. That being said, technology is still really, at the end of the day, used for consumption for consumers. People want this technology. People want to use it for whatever apps or whatever businesses they want to be in efficiency. So you have that kind of double-edged sword, whereas you have a lot of demand in China trying to get to AI, but they're restricted because of GPU chips. They're somewhat restricted because the framework is not very clear. And there's a lot of red tape per se to get to that point. So how does that translate to, I think, other countries and their own learning models? I think baseline, it's big. You need to have large capacities, large campuses, expansion plans. But at the same time, all these, I think, nuances of each country is going to be very specific in how the demand comes, when it comes.
So Chye raised the topic about energy, which I think is critical. And again, if U.S. and Europe are any indication, interesting choices to make as to whether the AI goes where the people live or where the energy and land are. And there's often obviously two different things. Given that LLMs are not known for being latency sensitive, I don't see any necessarily any conflict there. But I guess the big question I have is, given the energy required, can supply keep up with demand? And what are you seeing as the major pain points? Is it energy generation, permitting, transmission, or other factors? So I'll kind of throw that open to everybody. But Chye, since you raised the topic, why don't you go first?
Sure. I mean, we all hear in the press a lot of renewable projects, like solar, wind, and so on. But we hear a lot less often about transmission, right? Because very often, the places where energy is produced is actually quite far from where it's actually being consumed, right? And usually the bottleneck is actually bringing the power, the renewable energy from the point of generation to the point of consumption. And that's usually where the issues are. Because you've got to lay new power lines, you've got to go through people's land, you've got to get permits, and you get stuck in all kinds of red tape and problems. And usually there's a lot of legacy, dirty fuel like coal and gas. And there's lots of monopolies and utilities that set up in those countries. And those actually form a lot of barriers for a lot of these renewable energy sources to come in.
If I could just add, so two of the markets we've been focusing quite a bit on North Asia are Japan and Korea. Japan is an interesting one, exactly what Chye mentioned. The generation is not the issue. Distribution in a highly developed city going through neighborhoods, residential districts, even just conduit in the ground is difficult to find that capacity to get to site. And so what it causes is power is available, it just might take you 5 or 6 years to get it. And so when you have such an elongated development cycle, it completely, it really makes your investment proposal difficult to justify. Then you have places like Korea, where it's somewhat similar to the challenges you face in markets like Tokyo, but you have the added element where it's become, data centers have become kind of like public enemy number one. And so you have residents, schools, politicians all rallying to say, the EMF generation that's coming out of these high voltage power cables are causing cancer and all these things. And so it literally not just hinders your development. In some worst case instances, you might have to cancel the development altogether because it's become such a large political issue. Then you have the flip side, which is markets like Malaysia. Part of the reason why we're seeing all this growth and excitement in a market like Malaysia is because the government is, they're creating fast lanes for data center operators to get power quicker. You have an abundance of capacity, but also the timeline to get that power is generally pretty short. And so it really helps to kind of foster our data center market development. So, Chris?
Yeah, no, I think, it definitely, I will say in a general sense, and it's almost always distribution across most of the markets when it comes to the generation is there. The challenge on the generation side is that when you look across, and especially here in ASEAN, but across the wider APAC, is that the green power isn't necessarily there on the grids, right? They're still predominantly using coal. And, you know, our customers have made public pledges. We've made public pledges to green our operations and go net zero. And so we're really looking for that. There's been, I guess, over the probably, you know, past several years, definitely like looking at the trend on some of the projects and funds looking to try to bridge renewables with digital infrastructure. There's been a few of those kind of bubbling around the region that I think are enticing, but they typically, from a capital perspective, right, they're coming from two different angles and haven't historically, I guess, you know, really played in each other's camps. And so that's been a challenge to actually get them across the line and then match that green source, as Chye was saying, with the actual digital infrastructure to make it green. Like you can't really cite, except for in some very relatively few markets around Asia, you can't cite the renewables next to where you're going to put your master planned campus. You know, just because it's two different locales.
So Sam, Lon, as Sam Lee said, if Malaysia is where there's the expressway and Korea is where projects go to die, what's your perspective on it?
Well, I mean, you know, we frontiered into Johor as we thought we were kind of crazy when we went, and it took a long time for us to work with TMB to get to that fast track, right? I mean, it's part of the education process. We're learning, our counterparts are learning, and it's good for everybody to say, hey, let's work with the Power Bureau, distributions, every country is different again. You know, your PPAs, your power purchasing agreements, your virtual power purchasing agreements can all be done. And is it efficient? Is it, you know, are you getting green, blue, purple, red power? Nobody really knows at the end of the day, except you're buying racks or you're really buying from a specific site. So it really curtails down to, again, is everybody aligned? We know we need this power for this data center. Why do we need data centers? Because we want to digitalize the economy. Why do we want to digitalize the economy? Because we want to grow and we want to become the next emerging market into a mature market. So all these things have to be somewhat aligned. So it's almost timing of the sense of, is this country ready for all this at the same time? Because you could have individual pockets of government bureaus ready for this, but if one link is off, everything is off. So that's really, when we enter markets and we look at power is essential to our business, right? But is this power, is it available? Is it deliverable? Is it cost effective? Is it sustainable? To answer all of these things, you have to look at a lot of other issues as well within that country.
Charles, I don't know if you have any final perspectives, perhaps touching on the Philippines, but I want to pivot a little bit to financing. I know there'll be some content later on in the day, but maybe just give you a chance to talk about who the providers are of global risk capital going forward, and perhaps you and Chye as well could just talk about financing costs and how is that changing as you enter or expand in existing markets.
Thanks. Coach and I both are members of the Singapore Telecom Alumni Association. I didn't really realize that until this morning. I'm quite a bit older than Coach Chye, but it does remind me of a time when, with the great wireless rollouts, mobile network rollouts back in the 90s, that sourcing capital was pretty challenging. I happened to be at Singapore Telecom at a time when they had a lot of cash. Didn't really think too much about putting on any debt. Fast forward to today, I think with the cost of debt having gone up 400 to 500 basis points literally in the last 15 months, and probably with a significant number of analysts and middle managers in various private equity and operating platforms only ever having had to deal with 2% all-in cost of money, there's probably a bit of a delayed shock in place coming, is waiting for all of us. So that's a general comment about how the cost of capital is gone up dramatically. And I don't think we fully appreciate until we're in full operating mode how high debt costs are like sand in the gears. they really have a significant impact on the way you run your business, the way you plan your business expansion. Without going into the names, I was talking this morning about some of the listed data center REITs, and I think they have quite a few challenges waiting for them in terms of how they expand without issuing equity. Equity tends to be dilutive to unit holders, and therefore really the only other place to look is debt, and then of course debt costs about 4 or 5% more than it used to. So those are kind of the general comments about the frictional impact of high cost of debt relative to what it has been in the last 11, 12 years in the global economy. I think somebody also mentioned, sorry, you mentioned sometimes the delayed provision of power. It looks to me like in greenfields developments, when you're sitting around waiting 2-3 years for power, you have a funding gap in your capital stack, and I'm not sure that the global risk capital that's out there is fully prepared as to how they address that period of time. Japan, for example, Tokyo, Osaka, TEPCO wait times are sometimes 3 years, 4 years, something like that. You have to have taken the land down in the meantime, and therefore you've got that period of time in which A, you've controlled the asset, and B, you're waiting for the power. I don't think that solution has been provided. I was recently in Japan talking to one of the big lenders in the market, and I don't think they figured it out either. So I hope that is specific enough in two markets that are very topical. Japan obviously is where a lot of capital wants to go because no one questions whether the demand is there. And I think the other thing is that if you work in the right geography with the right partners, you have certainty of power provision. It's just how do you fund into that waiting period. And I guess my final comment about emerging markets, Southeast Asia, which is where our new business is focused for the most part. There's real variability in the availability of power, also the reliability of the take or pay terms that the power company is going to promise you, most likely in a letter signed by an assistant vice president. And you have to ask yourself whether you're prepared to go to the market on the strength of that commitment. A lot of things can change. And he's a slip between the cup and the lip, as Shakespeare told us. So I think there's a lot of challenges on the capital side. If this were easy, everybody would do it. It does feel like almost everybody's doing it, which means that perhaps not everybody's going to do it equally well.
Let me add a couple of comments here. So echoing what Charles said, I think we're in a pretty challenging environment as it relates to financing. I would call it a triple whammy. We've been in the low interest rate environment for quite a long time until everybody kind of got used to it and assumed that it was going to stay there forever. And we got hit by COVID, and coming out of that with all the macro shocks, higher interest rates, supply chain disruptions, higher construction costs, it all leads to kind of a perfect storm, right? The whole global financial markets are being reset with big disruptions to commercial real estate, because all the pool of money comes from the same bunch of investors. And they manage data centers as part of a bigger global portfolio of investments. So if there's disruptions to one part of the world or some of the other assets, they want to try and fix that, and then look at data centers as part of the whole solution. Lenders become a lot more conservative with all of these global macro shocks coming in. They become a lot more tighter on the covenants. Pre-commitments are pretty much requested by almost every lender now. And this has led to, I guess, a sharper focus on operations, making sure that business cases are really tight. There's also a bit I guess, delayed effect on the high interest rates on the whole business environment. There's lots of sellers still adjusting to the new environment. But having said that, interest rate increases have been quite uneven. So in some markets it's higher, some markets it's lower. For example, in Japan, it's a key focus market for us. Interest rate environment has been a lot less severe compared to other markets. And it's a place where we do lots of deals. And also we're seeing emergence of other types of financing as well. in addition to the traditional equity or bank financing, we're looking at BES. Even private credit has become an option now in data center financing as well. We've seen a couple of cases of that.
Great. Yeah, I think I'll go ahead.
No, I just want to add on the private credit front. That's a great point, Coach. If anybody's been following the shall we say, the massive expansion in private credit, particularly as an alternative for traditional real estate private equity platforms to raise money, I didn't realize that the AUM has risen from $500 billion, which is when Apollo made it their private sandbox. And it's headed, in 3 years, it's headed about 2.5 trillion AUM. If that's true, and they see demand for, and of course we all know that private credit is going to be priced somewhere in the mezzanine kind of zone, which is nosebleed territory, 12 to 15%. And they're super aggressive lenders. As a former workout lawyer, I tell you, they leave no stone unturned with respect to recourse. You can expect that there's a significant shift in the cost of non-bank, non-traditional project finance, debt finance, really across the board. There's not just for data centers, because private credit is here. Huge amounts of money are being raised. That capital will find homes. And I believe it's going to be crowding out traditional bank financing as well. So I think generally the cost of capital is in a significant shift higher, and I think it's going to stay there for a while. So I think we're going to have to learn to love it.
I want to spend the rest of the time, and Ainsley, you can maybe tell me when I have a 10-minute cutoff mark or something, but go around the region a little bit and talk more about market trends. And we talked about Johor. What about the other side, Batam? And a number of you have announced, and some folks in the audience have also announced kind of Singapore Plus strategies, but what is there to see in Batam, and how do you see the opportunity? And I will, I guess I'll ask Chye as well as Sam Sam Law to opine on that.
So maybe I'll go first. So we invested in Batam sometime in the middle of 2021 in the midst of the Singapore moratorium. At the time, the moratorium was announced back in 2019. No new data centers for the foreseeable future. We saw either Batam or Johor as potential spillover demand. We have since announced a project. We'll be providing more details of the project during lunch. And we're building a 6 megawatt facility, which will be ready by the end of next year. We see Batam as an excellent place for acting as spillover demand because of the excellent submarine connectivity to the site. But targeting at a segment which is more enterprise retail colo, which based on the results of the Singapore CFA process, we believe that it's an excellent spot for us because most of the winners of the CFA process were either wholesale or self-performing operators in that area. Sam?
Yeah. Batam is for us was similar to Gong, what Chye said. It's a different product in some ways than what we say compared to what Singapore has to offer and what Johor has to offer. It is an alternative for a lot of, and I would say big hyperscalers, but hyperscalers will still go. But the quantum obviously is not going to be as big. You're not looking at the 50, 100 megawatt type of sites we're building in Johor. Batam will be about 15, if not about 20 megawatts. We're delivering that. But it will be an alternative in which connectivity is specific there. Power cost over there is actually, could be also cheaper in Johor, depending on how you do the BPAs and whatnot. It serves not only the spillover, but also does have a connectivity to Jakarta. It's one of the proven concepts we have is also the Ministry of Commerce set up their whole backup data center right across the street from us. So it's a lot of, again, government push for that area to become that digitization part, to capture the spillover. So, we were fortunate enough to get the CFA, and part of our stand was also to really promote the whole region area, And this is one integral part. Obviously, Indonesia is a huge market. Batam is kind of the medium way to access that market, but also take that Singapore spillover, and it could be a whole other region for hyperscalers.
So maybe stick with Indonesia. The assertion from our previous keynote was that there's a high vacancy rate here in Jakarta. So maybe Sam Lee and Chris Street, maybe just kind of give us a quick update as to how do you agree with that statement, and how do you see the market unfolding here?
Yeah, so I think Jakarta, naturally the runway is very long in Indonesia as a whole. I believe Jakarta, or Indonesia with 200 million people, it's a very large market. There's been quite a bit of new development happening over the past 2 years, and as of today, there is a lot of capacity under development and also coming online very, very shortly. Our view, HNX's view on Indonesia as a whole, and Jakarta specifically, has been that we're here for the long run. Again, knowing that there is a very, very underserved market along the runway, it provides us with a long-term strategy to build out our cloud infrastructure over the long term. We entered this market via acquisition. Again, employing different types of strategies. That it wasn't directly greenfield, but the acquisition came with an opportunity to grow in the adjacent site that had power. And so our view again, there's the immediate demand that is probably a little bit muted, but the longer term capability is why we're here in this market.
I would take a slightly different perspective to what was presented earlier, because I think historically, if you look at a lot of the what I would say is the existing stock that has been in Jakarta to serve the enterprise market, it always had fairly 60, 70, 80% occupancy rates, which isn't bad. I mean, that's a great enterprise business, and you can make plenty of money on that. There was then, the hyperscale kind of entrance into the market, and yeah, there's a significant supply pipeline. Most of that hasn't necessarily been brought to market, and so I think when you use the measuring stick that you would use in any other market, the uptake is here and the demand is here, and what you've got in Indonesia, you've got these vectors of growth that you don't. I mean, it's a very healthy ecosystem. Because as Sam mentioned, right, you got 220 million people, so you got a fantastic domestic market. You've got one of the most, if not the most thriving ecosystem in startups in terms of e-commerce, digital media, digital art, digital, everything digital, right? And you've got a government backing that. And so you've got a very, very vibrant startup community here. And you've got hyperscalers from both East and West that have been here 5 years, going on 5 years with the Chinese when Alibaba first came in 18. And so they've done, I think, no less than 3 rounds of upgrades of their infrastructure. And you got the US guys that came later. They did do some self-builds, and so that is probably what a lot of people always point to is that, but you're starting to see that demand come back. And again, it's not testing the waters with 2-3 megawatts. It's like, give me 10, 20, 50. So I think it's, I don't agree with the low vacancy. I think.
Got it. I think we kind of hit on China, hit on Japan. I don't know, Chye, if you want to talk a little bit about Korea. I want to also touch on emerging markets, but India. So Chris Street and Sam Lee, you both have gotten into, Chris, you have SCT as kind of an incumbency position given the Tata assets that you now operate, and then you have a significant local partner, Sam, with EdgeConneX. So how do you see that market? Any surprises you've seen this year, given all the demand and just the huge population and demand that you see there? Challenges around construction, challenges that you've seen in terms of the demand pipeline, delivery schedules.
So building in India is always an experience of joy. It's challenging, in every market. But I think one of the biggest things we're seeing, and this is, as you said, John, is we come at it, we went in with a partner, a great local partner with Tata Comms, and I think it was 17. And we had a very strong enterprise business there. And at that point in time, the India market was just kind of making the pivot to hyperscale at true kind of demand growth and scale. And so we've seen that kind of come up, and historically, right, data centers in India were always kind of concentrated in Mumbai, Delhi, and Chennai, which were also the network hubs. But what you've seen over the last, I guess 8 years or so is that 7 to 8 years is that that is diffusing across. So not only the top three, but you got Hyderabad, you got Bangalore, you got Pune. But now you're seeing markets like Jaipur, you're seeing Kolkata kind of come in and really kind of take up and significant kind of incremental growth, not just kind of edge deployments with a couple hundred kilowatts, it's megawatts, and so that trend is increasing. You're starting to see the traffic flows, and you're starting to see, it's interesting dynamic because India is that connection point between kind of the Middle East and the Gulf states, which we're seeing a huge rise in, and Southeast Asia, right? So it's an interesting inflection point, I think, in history.
So we are out of time. Unless there's something you really want to say about India, Sam, I want to give Chye an opportunity to talk about some of the smaller emerging markets, and then we'll call it a day.
I just spent just 1 minute on Korea and then 1 minute on Vietnam. So we took a slightly different approach for Korea, and I kind of disagree with the fact that with your comment that most business cases go to Korea and die. We're executing well in Korea. We made an investment into Dreamline, which is a fully integrated business, which has a data center, fiber business. We took a slightly different approach in Korea because we realized that network is the key to unlocking success in Korea, and that's why we made that investment. So my man Ricky is sitting in the audience over there, so please feel free to reach out. He knows a lot more than me. So we started our investment over a year ago with just one data center. We will be celebrating the opening of our second data center later this month, and with the third data center in August of next year. We started first with enterprise co-location, and now we're going after the hyperscale business. Right. Dreamline has also expanded its network business to now nationwide, all the way from Busan to Seoul. Right. And then I want to talk a bit about Vietnam. It's something that's close to my heart. Vietnam is, I think, one of the large frontiers in Asia. That's full of potential, but hardly talked about. We believe that it will be a matter of time. It's not if, but when the hyperscale business will come to Vietnam. It has its own problems. Every country has its own sets of issues, but the demographics are plain to see for everyone. It's a big beneficiary from China with all of the production coming in, and a young population, emerging internet penetration. So we took a first mover by acquiring land in Saigon High Tech Park, which is in Ho Chi Minh City, and we're taking steps to make sure that when the wave comes, we'll be probably one of the first in line to be providing services with our operating partners over there. Thank you.
No time for questions, I'm afraid, but appreciate all the perspectives, and I'll hand it back to Ainsley.